All right, guys. So, as you know, kind of a shit day for me. I'm not gonna lie. I set too tight of a stop on Amazon. I didn't think it'd wick that far down, and to be honest, I was 2 cents off, so I was almost perfect. But yeah, fuck. I mean, it got away from me. It is what it is. But look, it's done. The opportunity, it's still there. Like I still think, the target on Amazon, realistically, like if we look at here. And I'll show you guys a quick fib retracement. So from this move, the last big move it had from here's the high to the low, bam. The next fib level, if we get there, is up here at 288. Okay, so real good chance of it getting there. There's also the measured move that we can theoretically take from this consolidation here if we're to get back in this range and break out of it. That takes us to the 265 target that I had, right? So I gave you guys the more conservative target because, I don't want to be a dreamer, but the fib levels tell us that the next real big target for Amazon is actually up there at 288, and that could take, a year or two to happen or longer. But that is if you're going off the pivots. So one, two, wave three. We're in wave three now, theoretically, right? Wave three take you up to here. 288, and then wave 4 correction, come back down, and then you get your wave 5. So that's what I was seeing with Amazon. Still see it, still likely. And if you guys are less prone to volatility or it bothers you less than it bothers me, you can chase this thing. I mean, I still think at 227 it's a good buy, especially if my vision comes true and we get up here to 265. However, the best time to buy options was down here, and we did. The original trade plan was right here. I literally gave it to you right here on this wick as soon as we hit this zone. Tapped it 3 times, couldn't break down from it, and now we've bounced. And then today, we got the classic break, retest, and go. So this thing's going to go now. It's for sure going to go. This is like a A+ setup, about as good as it gets. And Amazon's undervalued on top of it. And we have Elliott wave starting to turn green. I mean, it's gonna go to overbought. It is. It's gonna go to new highs. It's not gonna be a vertical shot. You're gonna run into some resistance about now, right? So you might get some consolidation around here and then push up, whatever. Who knows? I don't know. I don't know where they're gonna. I wouldn't be surprised if they run it right back up to here before earnings, like I was saying. But regardless, as good as my charting was with this and as good as the plan was, I let my emotions get the best of me. So that's one thing to take away from this, is that even me, as long as I've been doing this, uh, I still get emotional, and I hate losing money. I don't care if it's $20. I just don't like losing money, and that is something that I have to work on, and it's part of this game. However, I would rather miss a trade, right? Like I am gonna miss this trade because I'm not gonna probably chase it. If we get a big red candle and we come back and retest this again, which is very unlikely, but if we do, then I'll take it. I'll get back in there. Otherwise, I'm looking for my next opportunity. But look, you know, I would rather miss a trade and lose $50 than be wrong, not have a stop in place, and get the weakness that could have happened with Amazon, because the reason this scared me is the next real support was way down here at like 210, right? This is the next real support. So if I was in at 222 with $22,000 and we go down, you know, $10, $11 a share on 100 shares, I'm down a grand just like that, and my options would have gotten absolutely smoked. So that would have been a real painful L. So sometimes it's best to have a stop loss and just get stopped out and then reassess the trade and maybe get back in, like I still potentially could do here. And I should have this morning. As soon as I seen that happen, I was literally watching it, and I just didn't. I don't know. Um, like I said, I let my emotions get the best of me. Regardless, that's not the point of this video, okay? I'm making this because I want to show you guys what I'm seeing in this market that's making me so emotional, okay? So here you go. Here's the S&P 500. It's at all-time highs. It's broken out of this huge long-term logarithmic trend line, and it's never done that in freaking the last over 10 years. It's never, ever, ever been able to break this trend, and we got above the trend line. So that is scary because you can look at it two ways. You can say, oh, that's awesome because we broke out of a long-term trend line. Maybe this is like a new era for investing. And a lot of people believe that. But I'll tell you what I see that makes me not believe that. So I've taught you guys about divergences. So here we are on the daily chart, and you can see we have a bearish divergence forming on the S&P already. And for those of you that are new, a bearish divergence is when you see the RSI, so the relative strength of the index being the market here, in this case, the S&P 500, you can see that even though we're making new highs, the strength of the stock is making lower highs, right? So there's less and less interest in buying at these levels, even though the stock continues to go up. Well, 99% of the time, those divergences play out. And when they do, you're going to get a correction on the RSI, at least down to this 50 level, most likely, which if that was to happen, could bring us all the way back down here, right? 646. And I've been telling you guys about this level for a while. And we tried to sell twice and hit here. So, if we redo these lines to make them current, I'd be watching this level for critical support because this would be a third attempt at breaching that level. And if we don't get a bounce there, that's bad. Like we're definitely at least coming to this 646 level. And if we also take this entire move, right, from the April lows, right, if we were to get an actual correction here, the market could come all the way down here. I don't think that's going to happen at all, but I would expect that we're at least going to go back and test the previous highs because that's usually what you see on the index. So this area right here would be where I would start buying again in bulk, as if we got down into this area. Now, I don't know how likely that is to happen, but I think this level right here is very likely because by the time this plays out, the 50-day moving average will be about there. And we have not retested the 50 since the April capitulation and rebound. We got the gold cross on SPY for the first time in 15 years. And if you know anything about trading, then you know that whenever you get a gold cross, at some point the S&P has to come back and retest the 50. Now, you could maybe count this, right? We got real close there, so maybe you count that. And we did bounce right away. But, you know, we haven't had like a real 5 to 10% correction this whole freaking time. It's scary, right? Simultaneously, you have these divergences building, both on the daily and the hourly, right? Like there's a look. So here's a past example of it playing out, right? So divergence, divergence, divergence. So you see we have lower highs on the relative strength, but higher highs on the price, and then you got the dump, right? So that's the correction that happens, right? So that divergence finally plays out. Stock pulled back, or the index pulled all the way back down to support, right? Well, here you go. Same thing again. Made a high, made a lower high, and the price is making a higher high. So we're getting divergence again, right? Does that mean we're just going to fall off a cliff? No, but I would expect that we're at least going to come back and touch the 21 EMA, which if you want to see what that is, you can literally just type in 21 EMA, right? There you go, 13, 21. Okay, this is a dog shit filter. Don't use that one. Sorry. Yeah, don't. I clicked on a random one. Let me find a better one. I have my own that I built, so we'll just use that here. EMA cloud. Okay, so I made this. It's a cloud that uses the 5, the 9, and the 21. So the bottom of the screen is the 21 EMA, right? So when this divergence inevitably plays out, I would expect at the very least we come down to the bottom of this cloud, and then we reassess there, right? Um, so I don't expect that to happen until we lose this level here, right? So, but I do think it's inevitable with the divergences that are building out, the low amount of volume that we have at these levels. And I've been telling you guys forever that the target, short-term target on the SPY is 675. So we may push up and hit that tomorrow, right? I am not going to try and time the top. When I see the signs telling me to get the fuck out, I'm going to get the fuck out. That being said, there's always something moving, right? I told you guys about CoreWeave weeks ago. I told you to buy it down here. There it is, right? Here's the trade plan. We're halfway to profit already if you were in that. Serve, right? Market was down today. Serve blew through our target. So congratulations if you took that. HIMS, I don't have the chart here anymore, but I gave it to you guys down here. Went all the way straight up to the golden line, the $60 line. That was a perfect trade. This has yet to come to fruition, but technically we're still in the green here, if you can see, right? So JD, I told you guys was going to take a long, long time. We've traded ETH numerous times. We traded AMD like pros. That was lucky, but nailed that one. And that's another reason that I'm kind of taking a break. Look, I'm up, I'm up more this week than I'm going to make in a month at work. I'm tired. I'm exhausted. Why not just step out while I'm ahead, take a breather, right? It's unfortunate again with what happened with Amazon because I would have probably had like a $10,000 week, but hey, it is what it is. Look, all I'm trying to show you guys is that, okay, we saw that on the SPY, all right? We are seeing the same thing on the Qs again, right? So here you go, higher high on price, so higher low, higher high, then we have a lower high, and we'll see if we make a lower low now on the RSI here, but we are building out divergences all over the damn place. The Qs do look better than the S&P, which is weird because usually they're pretty correlated, but we'll see how that plays out. And then we also have IWM, same thing. Got a divergence here, very slight one. I actually like IWM a lot. This is a trade I was planning on giving you guys, is to long this into like the end of next year. This is just the small cap index, and if they keep cutting rates, that's really good for small caps. But I was hoping that we could get like a pretty good little pullback to this 50-day at some point and then long it from there. So I'm kind of waiting on that. I don't know if it's going to happen though. What else did I see? Oh yeah, SLV. This is a big indicator to me. Of course it got bought up though. So this fell off. You know, it hit our target right up here at $46 and it fell 7.5%. So on silver, that is a huge move. In fact, I don't think I've ever seen a move like that on silver. And you see the red volume right here? Huge selling volume. Huge, huge selling volume. I've literally never seen silver make that big of a move in one day. So it capitulated and then got bought up right away back into the middle of the candle. So now we're actually printing a hammer candlestick, so it could go even higher potentially. But there's a lot of bears sitting here. Like there's a ton of selling pressure right here. So why does that matter? Well, silver is a pretty good indication of the growth sector, typically. At least in this market, that's how it's tracking. So, you know, seeing that on silver coupled with what I'm seeing on the S&P and all the other indices, like not a time to be taking a lot of risk. I'll just say that. Now, I do think we're probably going to have a green day tomorrow. I do. But it's next week that scares me because seasonally speaking, the last 2 weeks of October are really volatile and we're sitting at all-time highs on all these stocks. And we have earnings coming and starting at the end of, and it's already starting today. So APLD just had earnings. Let's see how they're doing. And it ripped right to $31 naturally. It's like I knew if I sold it, it was gonna go. It's just how it is, man. You know. But hey, I made 100% on APLD up to here. So good run, good run. And yeah, it is what it is. So, hopefully we see more of this for earnings. We see like more positive catalysts like this. This is probably going to make iron move. Oop, spelled that wrong, right? Yeah, so iron's creeping up after hours because it's the same industry. So this is another thing you got to get a little worried about when stocks go vertical like this. I mean, how often do you see that, right? Look, eventually stocks work like rubber bands, right? The farther you get away from these moving averages, the harder the snapback will be when it finally happens. This thing is literally vertical. If it was to snap back and retest this line right now, like if we got some sort of bad news or, whatever may be the case, that stock's going to, I mean, that's a 50% drop right there. I'm not saying that's going to happen. I'm not. I'm just saying that now is not the time to be longing shit. Like when stuff is going vertical, you are chasing it. The time to go long was down here when I told you about it at $13 or whatever, right? Called iron out way the back here. Okay? So now you guys are like, oh, well, I missed all those opportunities. Well, they'll inevitably come again, right? Like this is just how it goes. And also you look at this and you go, okay, well, if it's going vertical like that, there's got to be an opportunity to go short, right? Well, I told you guys about this setup. This stock is going to be primed for a short at some point, and almost met my criteria for it today. Not quite though. I'm looking for the stock to close under the lows here, and it did not. So now we need to close under this low, so we can move this line down here, right? So we need to close. If we close under that low, you can take a short and ride that bitch at least, at the very least, to the halfway point of this candle. Which if you shorted that, you'd make a shitload on puts, like probably 100 to 200% on that move. So point being is it doesn't really matter if you missed stuff. There's always another opportunity. This guy's going to be primed for a short too, especially if we hit that level right there. I'd be all over that sucker. If we hit 1888, I will short that. This company sucks in my opinion. What they make is stupid, but and then we have opportunities right now to stuff that you can look at buying. So I've been talking about Tiger for a while, and I know everything else is ripping, and you're like, oh my God, this sucks. This thing's not doing anything. But look, this is how we win, right? I called ARM back here, and it was doing the same thing. It was down in the golden pocket. I was literally beating my hands on it right here. Hey, buy it here, buy it here, buy it here. Didn't do anything for like 1, 2, 3, 4. Well, 1, 2, 3, 4, 5, like a week. It was around there, okay? And then well, bam, in another week, we're up here at 170. So from $140 to $170 in a week, that is a huge move. That is from our buy price to here, 18% move. If you played that with options, you would have made a shit ton of money. Okay. What about MU? I know you guys, the long-term members, remember MU. I mean, we killed this stock. Killed it, right? I gave you guys MU right here. Right here. At $109, I said this is the time, like buy this, because we got a breakout from this consolidation right here, right? Here, for the new guys, I'll show you guys here. So there's a trend line down. Just drawing this quick, right? Descending channel. We broke the descending channel, and we broke all the way above this resistance here. Then we came back, we retested that resistance, found a base, and as soon as we pushed through, started to push back through that, I said go long. And I gave everybody a target of about $137 because I was just simply targeting just above the other highs, which was it was based on a fib level. Well, 137 is like right here, right? So you'd have made a bag there, But you could have sold some and let the rest run. And I mean, look at this thing go, dude. Look at it go, right? So now you're thinking, okay, well, this is boring. This thing sucks. I hate this stock. Blah, 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 right? But I'm telling you, this is the same setup, okay? Look at it growing too. That earnings was better than that earnings. That earnings was better than that earnings. That earnings was better than that earnings. Like they're consistently beating earnings. 186% beat, 80% beat, 141% beat. Let's look at the forecast here. Analysts have the stock at 14 on average. 11 analysts with a price target average of 14, max estimate of 17, and a minimum of 4. There's always the bears, right? But the fundamentals are good. They're forecasting quite a bit more in revenue here, or in EPS and in revenue this next quarter. So if they hit on earnings, this will send the stock right back to the top of the channel like almost immediately, and it will probably start to anticipate that before earnings, right? Because the market is forward looking. So why would you buy here? Well, we're in an ascending channel, right? We're in an ascending channel and we're riding all the way up. We have now started to base out, and if you do a fib retracement from this level to this level, there's your golden pocket. Where are we at? We're in the golden pocket, right? All right, so this is the smart money area. This is where if the institutions are going to save the structure of the stock from being bearish, then this is where they have to step in, is right around these levels. Okay, now does that mean it can't go here or here? No, it doesn't. It could, but it may not. But you're already in an area where it would be worth accumulating the stock, and that is this area, right? Really anywhere, as long as we hold above this low here, it's fair game, right? So anywhere from 1017 to 927, really. I mean, realistically, anywhere in there is still bullish structure. Now, I don't think you're going to get that low, because how many times have we tried? 1, 2, 3, 4, 5, 6, 7 times they've tried to slam this down, and there will inevitably probably be one day where it actually gets down and then wicks right back up, right? You see that shit all the time. There's a huge liquidity supply zone right here as well. So if you saw that happen, like that would be your chance to really go and get a lot of it at a great cost. But regardless, the technicals are telling us this is where, you know, institutions are likely to save the structure, because here's your long-term trend, right? So here's your lowest low, slightly higher low, slightly higher low, right? This still isn't lower than this low, right? So still an uptrend. Still higher low, higher low, higher low, right? So technically, this could come all the way down here, and it's still in an uptrend. See, like you're not breaking this trend here, right? That's why I say like the absolute best spot to buy would be right here if you can get it. If you can get it in a low, like under $10, you're doing really good on this stock. But you know, there's no promise that's going to happen. And you know, you're basing here for weeks now. Like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. 2 weeks you've been sitting here. Okay? I know it's boring. And look at here, the same thing over here. The same shit happened, right? And then boom, right? You're likely going to see the same thing happen again. You are. You're probably going to see the same thing happen again. And every other time we've lost the 50-day moving average, we've been under it for a very short period of time. Here, look, little consolidation under it, boom. Little consolidation under it, barely, boom. Little consolidation under it, barely. What do you think happens next, right? Doesn't mean it's going to happen. It doesn't. It doesn't mean it's going to happen, but it's the most likely scenario right now. And that is all you can do as a trader, is play the odds and do it in a risk managed way, right? So, this is a trade that I like, even though I reset my account today, like I feel like I should take this because it's amazing risk to reward. I just, I don't know. I needed a reset mentally today. So anyways, I'm just showing you guys there's always something out there that's moving regardless of what the market is doing. This is not moving with the market, not really. It got slammed down for nothing of its own reasons. Like all of the fintechs got hit. So you saw SoFi got hit, bounced. I gave you guys it right here. Literally said buy the dip right here. You'd already up if you did that. And Bull, I think, is a fintech too, right? So same period of time, got hit. Bull is a great buy here as well. This is a super good time to be accumulating this stock at these levels right here, right? Anywhere in the sub $13 range. You are still in a downtrend here, but look at the volume that came in. This is the most volume the stock's ever seen, ever, right here at the this day where it got down to 1138. So I can almost guarantee you that that is going to be the bottom there at 1138. And look at that, we hit our supply zone. Imagine that, right? So great setup here on Bull as well. In fact, if you wanted to take this trade, I can give you an example right now. So today would be a great day to buy it, actually. But you could simply just target the previous high up here if you wanted a really simple high probability one. You could do that and then set this as your stop because you're almost guaranteed not to get down there again with that volume that came in. That's a 3-to-1 right there. How long it takes to play out, couldn't tell you. Couldn't tell you. Okay? But I mean, it's that easy, right? So let's, you say you want to risk $500, so risk 500 bucks. Okay. 442 shares. So 442 shares. 442 times 2.54. $5,542 into Bull here. And if you hit this target, you make $1,500. If you hit this stop, you lose $500. A little over 1,500 bucks if you hit that top one. And that's just targeting the previous high, right? What I think you're going to end up seeing is a W pattern play out right here, right? And then continuation potentially, but regardless, I mean, you can't ignore that volume. That's crazy. So this has a really good chance to go. And I think today was a retest day, and we probably see this continue at this point. Uh, you know, so just because the stock market is being wonky, when I say the stock market, I'm talking about, the S&P 500. Bull is not part of the S&P 500. Tiger is not part of the S&P 500. There are assets out there that are moving on their own. This is doing its own thing. We played this. Does that look familiar? What I show you on the Tiger charts, right? Tell me that doesn't look identical to that, right? Same setup. Same setup, except this one held the 50. Tiger flushed under it. Does that mean it's not going to happen? Okay, so there's that chart. Look at that chart, right? There's this chart. I mean, guys, IPO spike, drop, channel, explode. IPO spike, drop, channel, explode, right? And if we do get a breakout here, like you're going to be so happy you bought here because if we get a breakout, right, from this consolidation range, you're looking at a future price, and this is, a long ways off here, potentially of $22. In fintech, brokerage companies perform well over time. They're one of the best performing assets over long periods of times because of how they make their money. They make money off of the exchanges of assets. So whether the stock market's moving up or down, they make money on the trades. Tiger is like basically a foreign market Robinhood. Okay, so yeah, consistently beating earnings and growing, expected revenue growth, expected net income growth. They are profitable, just starting to be profitable, but they're getting more and more profitable. This is a very good potential for a long-term investment, and I think you guys should really consider this one. I keep beating my hands on this one. So yeah, that's it for today. And as you can see, back in 2021, when we got the peak of money printing, the gambling, this back then they weren't even making any money, right? So like they were net negative overall, and they still pumped the stock to $40 because that was like an IPO, and then people are degens during that period of time. Well, now the fundamentals are aligning with it, okay? So different time, but just yeah. Regardless, if you want to trade it for the short term, trading it to the top of this range from this lower channel is a pretty safe bet. Uh, this video's become really long. I'm sorry. It wasn't meant to be. But I'm just trying to show you guys what I'm seeing in the markets. So gold had a huge flush today as well. It's also a scary sign because this thing has just been vertical for so long. So we saw commodities come off really hard today, and a lot of the market came off today, but some of it didn't. Amazon, CoreWeave, the robotics sector, all doing well today. So it's not like we're crashing. Okay, we're just seeing rotation. And actually, stock market heat map. So here you go. You'll be able to see the rotation today. So rotation was into, got some healthcare, dividend stocks, consumer non-durables, consumer staples. So that's scary to see. Growth's probably going to come off. Um, some rotation into the bigger companies that are undervalued right now, so that are like lagging, right? So Meta got a pump, Amazon got a pump, as we know. Costco, that's also scary to see because all the things that you're seeing being rotated into are considered safe havens. Okay, and what's coming off today is mostly risk on stuff. So energy came off, transportation, health services, consumer durables, technology largely. It's kind of a mixed checkered breath of a day. It's hard to get a read on that, to be honest, but the only sector I really saw doing well was just some individual stocks, and then the robotics sector. So yeah, pretty bummed that I decided to sell APLD at this point. Not gonna lie, the thing's probably gonna run all the way up to this high here. But I don't take risk into earnings in my trading account because it's a trading account. So it is what it is. Gamble if you want to. But we got a huge, look at this, look at this dump, and we've recovered the whole thing at this point now. Pretty awesome to see that this company is actually on its way to being something. So yeah, anyways, that's what I'm seeing in the market right now. I hope you guys learned something here or saw something, and I hope y'all have a good night. All right, see ya.